report. It's 9 o'clock on the 12th of February. Let's get started. First things first, we know there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. If you're out there typing a wire yes, everything's coming through loud and clear. Let's get a little howdy doody on YouTube and possibly Twitter, Facebook, LinkedIn, wherever you're watching the Pulver Report. Let's have a look at the charts and a couple other things. So notables this week, we have some earnings. We have 425 companies. What I'm looking at right away, we just finished up the Waste Management Open in Phoenix. We just finished up the Super Bowl in Las Vegas. We have Coca-Cola with earnings on Tuesday before market. We have MGM. We have Lyft, Airbnb, Robinhood. That'll be interesting. Let's see here. Kraft Heinz, a little defensive play. Barrett Gold. I still think gold's one of the better setups this year if we get above 2100. Cisco, possibly, an oldie but goodie, but getting into the AI space with more computing power, similar to what Intel did, IBM, stuff like that. Penn Entertainment, that is gaming, I believe. John Deere, we still showing some heavy equipment similar to Caterpillar. We have Coinbase, DraftKings, Roku, for those of you that are trying to break the cord with the YouTube TVs and the Rokus of the world. And that's it. So possibly a couple earnings plays this week. The market continues to melt up higher. Overall, for the week, so for last week's trading, the S&P was up 1.37%. The NASDAQ up 2.31. Russell 2.41. Dow was pretty flat at 0.04. And we're just staring at charts at these higher prices. So technically, again, we've talked about this last couple of weeks. The stretch and the rally that we've seen since November, the bottom in October 2023, has stretched a little thin. So we're trading at 501. That's just above that big milestone. SPX crossed 5,000 for the first time. The Q's at 18,000, or the NASDAQ at 18,000. The Q's at 437. The DIA at 386. Dow at 38,671. Going into this week's trading, let's go to the calendar really quickly and some economic news. So high impact this week. Let me just go high impact only. All right, Herbert, good morning. Angela, good morning. Trish, good morning. Ruthann, good morning. Good morning, good morning. Nice to see everybody. Let's see here. We have employment news out of the UK. We have CPI for Switzerland. Hopefully this will come in. This is month over month. But if we see, inflation numbers be pretty solid to the downside in Switzerland, most likely they're going to be among the other central banks that'll be cutting rates this year, Fed included. Fed has been pushed back into May. We saw that with the shift that we saw a couple weeks ago in the FOMC. Lay down, buddy. I know. We have CPI this week on Tuesday for the U.S. So we're likely going to get some movement out of the U.S. with year over year. This is an interesting forecast. We're forecasted at 2.9. So the first sub 3 that we've seen since the highs in July of 2022. And that'll be a kind of a big print. Previous was 3.4. So are we starting to see inflation continue to turn in the right direction? How does the market take that? Good, bad, and different. Watching price action as always, but let's see what those CPI numbers give us on Tuesday morning at 8:30. So that's tomorrow. We have more news out of the UK. We have employment news out of Australia. GDP for the UK, core retail sales out of the US, unemployment claims on Thursday. And then we have PPI on Friday. So 2 big inflation plays this week for the US, CPI on Tuesday and PPI on Friday. Should get the markets up and running. Let me move this over here and let's go with a clean chart. So go clean living right here. All right. Jan, good morning. LG, good morning. Lori, good morning. FK, Jacob, David. Good morning, everybody. Perfect. Okay, here's the dollar index. Still sitting at this little, FOMC move. So we broke out of this yellow box. I was looking at this broadening pattern with a lot of indecision. So we had our holiday support pivot right here just below the 101 handle. We have that little fake out right around 101 to 100. The dollar right now is in the middle. To me, this looks like dollar strength could continue. As long as we hold above probably the halfway point of this yellow box, I'm still looking for some dollar strength. I'm positioned for that. We're short on euro dollar, short on pound dollar, and I think I took a stab at the Aussie dollar last week as well. Let me confirm that. Let me go flex room and go into the trade log. I think I did. Yes, so we did an Aussie dollar sell, euro dollar sell, pound dollar sell. I'm still long dollar CAD. I have not been filled on Aussie New Zealand yet. Let me take a look here. Aussie New Zealand is trading at 106.43. We tapped that 102. We did, you sneaky son of a gun. 105.88 on the Aussie New Zealand. This is a nice clean wedge break. Hopefully this holds true. So a break. If we get a pullback here, looking to make sure that we hold, 106.50 to 107 resistance, and see if the Aussie New Zealand continues to trend a little bit lower. That's what I'll be watching. We're in that trade, so we got filled with a sell stop at 107, or I'm sorry, 106.25 on the Aussie New Zealand. So let's go dollar index, oil, gold, silver. 104.16 on the dollar. Looking to see if it stays above this yellow box for break retest. Going for some upside, possibly 105.50 into 107 if we're going to see dollar strength and possibly a trend. That's it. I mean, I don't want to necessarily see a reversal and have fake outs and more kind of choppy price action. That being said, it would make sense considering this broadening pattern is kind of stuck in the middle right now, so the market could be a little bit conflicted and fight. If that's the play, then I'm not sure if I'm going to overtrade in the dollar basket. I might just, try to whatever. If it works out, great, we'll be in profit. If it doesn't, I may not chase because we might not get the follow through. So I would rather, wait to buy the dollar basket down here, wait to sell the dollar basket at equal highs, and consider just, selling high, buying low, keeping it pretty simple as far as the dollar basket goes. Oil, gold, silver. Oil 76.13, nice solid bounce last week off of this trend line or this channel, right around 71 and change, just below 72. We had this kind of morning star appear around 71.50. I still like oil to the upside. I was hoping we would get a better chance to buy low at 68 or lower. I don't think we're going to get that right now. So, right side of the trend line, oil looks up. Channel support, oil looks up. If it's very structured, that's fine. But at some point, we probably just head back up to these highs. If you're selling oil, I'd sell it up here at 90 to 92.50. If you are buying oil, you can define that risk pretty easily right here. 76 and change stop loss below the U-turn. If it heads up higher, you can scalp. You can move your stop loss to break even. But looking for oil to head a little bit higher. Gold and silver. Gold and silver right here. One too many letters. Gold trading at 2019. If I'm going to be short-term bearish on gold, we got to get below on a daily, weekly chart below 2,000. I still like gold, very bullish above 2,100. So more confirmation required on both sides. I'm not going to short it without confirmation below 2,000. I'm not going to get long without confirmation above 2,100. XAG, silver, still fighting in this range. Strong support around 1970 and 1815. And very bullish to me on silver above 26. So holding positions, holding SLV, holding silver. Bitcoin was testing the 48,000 last week, and we're right at 48,000 once again. So I had mentioned this last week. If we have a range trade, so we have this nice little rally on Bitcoin, pull back into this area here, 40,000 looks pretty good if we're going to get a chance to add to positions. Because we may not see a lower low. So I think 40 to 38,000, good spot to be adding if you're technically looking for a buy position. Of course, if we break higher, it's hard not to want to chase that momentum, but I'm probably not going to. I've got enough kind of position on it right here. But the highs are 68,000. So for me to say, well, I shouldn't buy it here, I mean, there's upside potential at 68. So that's a percentage, that's a gain. right? But technically speaking, after having a run, if we go sideways, this would be hopefully technically obedient. We'd have a pullback like this. So it could be one large bull flag. And if we get a chance to buy low, that's where I would prefer to get an entry on Bitcoin. Okay. All right. All right. More people popping in saying good morning, everybody. Let's get into some specific currencies. Like I said, we're trading at 501 pre-market, so we're pretty much right where we closed on Friday for the SPY. The DIA sitting right at these highs once again, trading just slightly lower pre-market. Futures is down a little bit. So we've got futures slightly down, S&P futures slightly down, NASDAQ futures slightly down, gold slightly lower, silver pulling back, oil in a bit of that bull channel. I did want to show a couple things on the Edge Finder. So sentiment survey. This is straight off the AAII website and put in here for the Edge Finder Pro. We're trading 49% bullish to 22%. Historically speaking, that is getting up there. I think the 1 year high is 52%. So we're getting up there towards greed. If you look at the CNN Fear and Greed Index, we're greedy at this point. Put call ratio, we are seeing a lot more on the bullish side right now. If you're looking at retail positioning, people are still short the dollar, or I'm sorry, dollar yen. Couple of things: retail positioning, smart money indicators. If people are, yeah, I'm saying people as in like retail traders. If the retail trader is looking for yen strength, they're not getting it in much follow through. If the retail trader is looking for a bearish stock market, they're not really getting much follow through. I think that people underestimate how much of a melt up this market can produce in general. So I mean, since the S&P, I thought 5,000 for the SPX was a big milestone. Is there going to be profit taking? The SPY at 500, is that going to be profit taking? Doesn't seem to be the case right now. Let's look and see where we have some open interest this week. What are the big expirations we have for Friday? The 16th is going to be a monthly expiration in addition to weekly. So there should be some high open interest coming into this week. Plus, we have new CPI and PPI on Tuesday and Friday. So that's enough to get the market cranking a little bit. Okay. So we're looking for, that's euro dollar. Let me see what I have for other assets in here. So euro dollar, if we go into, curious what the retail positioning is for the SPY. So COT positioning up, price up. We're looking at retail sentiment is, showing short. So I just think that the pain trade right now, it's like, think about this. If you've traded and, heard that there's dumb money and smart money, or there's, retail traders versus institutional. If retail traders are calling tops on things, they can still drift higher. They can be a lot more painful ahead. So I don't think that's the play. I'm like cautiously bullish on the indexes right now because at any point, sure, we could turn, right? The Fed's message, the market took it for a day on the Wednesday that we had the FOMC press conference with Powell. And the next day it was back up towards highs. The next Friday before we finish the week, we're sitting at all-time highs once again. And here we are, cracking some milestones. And I think the melt up just continues. Earnings has been relatively solid overall. Forward guidance has changed quite a bit in 2024. There's not nearly the same type of negativity that we saw into 2023. So just keep that in mind. And I think that a little bit more optimism on rates getting cut, environment being a little bit better, and the overall U.S. economy is showing resiliency and some good data points. So it just, I don't know, it feels awkward to have like just a slow, grindy melt up. In fact, I'll show this. This is probably the chart that's like, yeah, we're probably due for a pullback. It's the weekly chart. Okay, look at the weekly chart here. We have, I believe, last week's close officially 15 out of 16 candles bullish. That's a lot. Okay, so if we start here, we're looking at 14 to 15 bars. Let me just count them. So we had that big rip to the upside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yep. So 14 out of 15. That's a lot. That is a lot of bullishness. Typically we see cycles on daily and weekly charts with 7 to 11 candles before we have a pause or a turn. And it's a little wild, right? Very wild. So anyway, CPI could be a reason for the market to pause this week. I guess I'll say that. Technically, it makes sense. We could possibly melt up a little bit into today, tomorrow. Futures market up or down depending on what we see pre-market for Tuesday's CPI print. Hopefully, there's enough volatility. If we bring up the little expected ATR for the week, the SPY's moving around 1073, the DIA 707. The Q's around 12, yeah, 1262. Another one, same thing, 14 out of 15 weeks bullish on the QQQ. The DIA, 14 out of 15 weeks bullish. So yeah, I could see a little bit of a little check, a little punch to the nose to the markets over the next couple of weeks to kind of just check this rally a wee bit. Okay. Anything else here on the Edge Finder that I was looking at last night? Bank forecasts, certain instruments. Let's see here, all the labor data, market heat map, calendar that's going on this week, risk on, risk off. Let's go. Oh, this is interesting. A lot of traders out there, possibly have heard this. If you're in forex, you've certainly had this environment the last couple of years or thought about this environment. Um, this was really affecting my trading back in 2012, 13, and 14. And then once we had the race to the bottom with every central bank down near lows, I mean, once every central bank was under 2%, there was essentially no carry trade. Now it's back. So in the beginning of 2023, we had carry trade was a thing. Kicking off 2024, it's still a thing. So basically, you take your interest rate differentials and see which currency is stronger. So Edgefinder has this on for what currencies would offer, what's the base currency rate versus the quote, the interest rate divergence. Also, you can go into a broker platform. If we went into Owanda, how our financing fees are calculated for forex trades, and you can actually go directly to the broker and see that it's not exactly dollar Swiss, for example. So if we have the dollar Swiss at 5.5 to 1.75, that should, so go 5.5 minus 1.75, that should be providing a 3.75 differential. But you will see that if we go into search and we go dollar Swiss with a V, I guess. Come on, error fetching rates. Try again. Let me try. What the heck? See if this works. Well, this tool was working last week. Anyway, I'm happy to share this link if anybody wants to take a look at it once it's up and running. But you can type in the currency pair and see what the actual broker is giving or taking when it comes to daily trading and daily financing costs. So hopefully that link is helpful. I'll put this in the chat. Owanda financing costs. There's the website there. But at a glance, I mean, the Edge Finder Pro has that where you're looking to see if you want to be a carry trader, then you'd be going in these directions. So you'd be long essentially everything against the yen. You would be long everything against the Swiss and some of the pairs against the dollar. You're favoring dollar strength. So dollar, dollar. Looking at Aussie New Zealand is a slight differential to the downside favoring the New Zealand, which is why I thought if we broke out of that wedge below 106.50, 106.25, the Aussie New Zealand has a slight differential there, 5.5 in the Kiwi and 4.35 in the Aussie. So, but again, that might be difference per broker, but at least you're not getting charged necessarily to hold that position if you're looking for it to go, nice and slow. Okay. All right. What else do we have? Any questions, any charts, anything you'd like to take a look at? So this week for me, I'm looking at a couple of entries. We got opening bell in 9 minutes. Schedule for me this week. So Got a couple of emails coming through I need to address. Got some webinars this week. I've got a new course coming out called Hypertrend. I did a lot of testing over the weekend. It's the first full auto trend system that I've ever built in about 12 years, give or take. So I put a lot into that. There's a lot of bells and whistles. It's been pretty fun to test. Not only just full auto, which has been pretty impressive to run a trend system that just filters out the market, doesn't overtrade, and I can confidently deploy it full auto, which is pretty cool on a variety of currency pairs. I tested it on all 28 majors and minors. But anyway, I also did kind of the discretionary deployment where if I believe that it's dollar basket strength or dollar basket weakness or a particular basket in general, that's a nice way to also deploy it and let it clean up and do pretty well. So the winning percentages are pretty decent. Full auto, it was like 54% wins with a 1.2 profit factor, but I was tweaking some adjustments to it, trying to improve that, and I've got a couple other optimizations that I'll be sharing with traders this week. So that'll be a good time. When you get a chance, SMCI. Oh yeah, SMCI. Oh boy. I mean, this is pretty much like Nvidia, right? On freaking real. Just went bananas to the upside. This thing's up 150% in the last 5 weeks. 1, 2, 3, 4, 5. Unreal. So I don't know what you want to do with this, to be honest. I mean, if you're looking at Nvidia and you're like, what do I do? I don't know. You know, I guess you can keep buying it, but I would say, I mean, options only. I just think it's ridiculous. I mean, Nvidia is cranking to the upside. It's 43% up for the year just in the last few weeks. SMCI and some others are enjoying that crazy type of run, but this looks pretty euphoric. I'm not trying to call the top on this, but with moves like we see here, I don't see this ending well. I don't know when it's going to end. Obviously, it's like this thing could just run and have just ridiculous amounts of momentum, and then we take a look at this price in 6 to 12 months, and it could be 50% pullbacks. I don't know. So charts like this are a little nerve wracking unless you're already long, unless you're already chasing that momentum. If you look at the heat map and see where we are for the year, go into this. Looking at, let's just go heat map here, look at performance year to date. So if we go year to date performance, Nvidia's up 45.6%. We're seeing a lot of green in that semiconductor space. Big tech is up as well. Tesla's still down. I still like Tesla off those lows, though. We did a lot of credit spreads at the 175 by 170 level. I think that's pretty solid for Tesla to kind of look out this year, possibly put it in some lows. Energy sector continues to struggle. Healthcare has been pretty solid, but mainly driven by Eli Lilly, thanks to Ozempic. Trying to lose some weight, use Ozempic. That is not a public promotion for Ozempic. But that stock is up a lot. And anyway, so what I did discover is this. Let me see if I have the screenshots of this. Check this out. So growth centric, okay? The top 25 in the Russell just last week outperformed the actual Russell 2000. So the top 25 is up 15.31% aggregated versus the entire index up 2.41%. Okay. Large cap NASDAQ, top 25, 4.59% outperformed the entire index, 1.81%. So we're starting to continue to see this. Well, I guess not starting to, it's still continuing. It's just like last year. What carried the market higher last year? High concentration mega cap, right? Mag 7. This year, it's the same. Now we just have it. So go a little bit broader into like the top 10 stocks or the top 25 stocks. This is just a momentum gauge. So top 25 in the NASDAQ, top 25 in the Russell, top 25 in the S&P. Top 25 outperformed 5.36% in the S&P versus 1.37 on the broad market. So you continue to see high concentration into the, quote, best performing stocks or your top 25. So if you're looking for individual stocks and you're looking to chase momentum, this is a pretty good way to do it. Top 10 stocks, top 25 stocks on these indexes, if that's how you want to, diversify your portfolio, that's a pretty good exposure. And I think this is where the momentum is going to come from. Think about this. 2023 was highly concentrated with Mag 7. 2024 is maybe give it the benefit of the doubt that the broadening of the market, better performance is extending into like the top 25. So 25 out of 100 for the Nasdaq, 25 out of 500 for the S&P, and 25 out of 2000 for the Russell. So that's where I'm looking at. If you're looking to chase momentum, these switch, of course, like every week, just based on market cap and movements and percentage. And um, but man, it's a chase right now. I think that's what portfolio managers trying to do: chase momentum. I think anybody that's dollar cost averaging, you're probably in stocks that have just continued to run. From a fundamental and metric standpoint, they're overvalued. The S&P and the Qs. I mean, 14 to 15 weeks bullish. That's pretty extended. With news coming into this week, don't be surprised if the market takes a little bit of a pause. Doesn't mean we don't go up later, but I'm just curious if we put in a bit of a seasonal, high or pause, or the market struggles at this point because a lot of good stuff has been priced in, and we will see. So trade a lot of options. So for the student asking earlier, about SMCI, trade options. You want to trade credit spreads, do a 10 delta in the money bull put spread, and let price have to drop a ton. I can look at 927. I can go in. Let me log into Tasty, and I'll take a look here. Okay. Problem is it can drop super fast. Um, and even a 10-15 delta is going to change dramatically when the price could potentially drop. So having this right here, a 10 delta could still be like a 700. I mean, you're $60 below price, but man, it's like this thing can pull back 52% if it wants to. And all it's going to do is kind of check this trend. I mean, I would look at this just from a Fibonacci. If we looked at this recent blow off here, low to high, and if and when we put in a high, just expect the market to pull back to some reasonable levels, a 236 or 382. So anyway, let me get logged in here, and we'll take a look. Okay. Keeping my FOMO in check. That is a good way to recognize it, because that's what I feel a lot of traders have right now, is just chasing. Oh my gosh, this is up and this is up. Who cares? I mean, I know that I forfeited some gains this year already. I mean, I let, Meta, I took a whatever $15 profit on Meta, but it was up $30 to $45 if I didn't have it, capped essentially. Um, or actually, yeah, we ended up taking like a $30 credit on Meta, but we paid $15 for it. So we ended up netting like $14-15 on the position. And oh, if we did this, it's like you can't do that stuff. You just have to take your winners. That's what we expect to do in trading. Find a good trade, protect a good profit, manage your risk elsewhere, because it's not like everything's going to be a winner. But like I said, high concentration right now, which is what we're seeing a lot of. Okay, 1 second. Okay, so we're at opening bell, gapped higher in SMCIs. We're sitting here watching it at 762 with the previous close at 740. I'm just curious right now, if I go into this stock and look at a 10 delta. So if we went out, 45 to 60 days, try to get some premium here. I mean, for a 10 delta, you could go all the way out to, I mean, you could put on a bull put spread at 605. You're not going to collect a ton of profit here because it's going to be a $5 spread. But if you wanted high probability, an 80, let's say 80 to 85% probability of profit, you could do a 15 delta 600. Do this. So 600 by 595. That is not bad. You could do a 15 delta, get $1.65 out of a $5 spread. That's pretty darn good if you ask me. So that'd be about the only play I'd consider doing on something like SMCI, because it's going to take time. I mean, in the next 45 days, this thing dropped to 600. $600 is not that far away, but it looks pretty good on price. we'd have to drop this stock would have to drop about 21% for that position to not get paid. There's clearly something happening if all of a sudden like SMCI and Nvidia is down, 10, 15, 20%. So that's one way to play it. On the flip side, you can look at this and say, well, there's no way that after 4, 5, 6 weeks this thing's going to stop going up, right? So you can do the same thing and say on the flip side, on the bullish side, go up to you could go way up here on the bullish side because there's been so much momentum. We're trading at $760, and you could go all the way up to over $1,000 and say, look, this is my 15 delta. And I could do a 170, 1070 by 1080, collect $1.75. But that's also a $10 risk. So you collect maybe $2, maybe $1.50, $1.60. I'm looking at the spread here. That's pretty darn wide. So the mid's around 2. I mean, if you can get $1.50 to $2 out of this, that's not terrible. I'd prefer to have a $5 spread if you're going out to March 28th. If you want to go out a little bit further, this is a monthly expiration on April 19th. You can do the same thing. I'll clear the trade up, go back to your deltas. So you could do, 570, even lower than the 560. But now we're talking $10 spreads. So $10 spreads, and you're getting $2. You're risking 8 to make 2, but probability of profit 78%. It's pretty high, and I would favor that there's enough momentum to keep it there. I'd rather go out a little bit further in time, see if time decay works in your favor. If there's any indecision, let that decay work. So anyway, that's what I would do if I'm looking at something like SMCI. There's no way that I'm trying to chase this. There's no way I'm trying to like pour money into a stock that's up 150% for the year already. So trade options. That's what I think. Okay. All right. Hey, I'm gonna start wrapping things up here. And if you'd like to join me, if you'd like to come back and join me in about a half hour, I'm going to stream on my channel here, youtube.com/Chris Pulver, but I'm going to do a little collaboration with A1 Trading. I think Nick and his team are finishing up their session from 9:30 to 10, and I'm going to jump on and do a live stream at 10 o'clock. So my segment, I'll just push it on my own YouTube channel, and I'll be back here in a little bit. So I'm going to take a little breather, grab a little coffee, and we'll come back, circle back into a 10 o'clock session. Everyone that's with me for the typical equities on demand, just come back to the YouTube channel at 10 o'clock, and we're doing something a little different today. Okay. So here's what I'll say: bring some questions in the 10 o'clock session. So just come back into the YouTube session, and yeah, let's do a little bit more Q&A. I'll revisit some of the stuff we talked about: dollar, oil, gold, silver. Highlight some of the things on the A1 Edge Finder Pro, and I'll probably end up looking at a couple positions as well. I want to see where my buying power is at for Schwab, so I'm just going to take a look at everything that's jostling around right now. We're at 501 and change on the SPY. We are at DIA starting to hold at these highs. Qs 216 is this Friday, so looking to see if we have some pushing. We're at 437. I'm trying to think, did I close the Qs out last week? It's going to be close. If it's in, I don't know. I could probably just hang on to it, but to the upside, 434. We're slightly bullish bias right now. If we have this as like this week's high and we start to crater, I'd rather do something more at the money right now. So I might have a couple trades as we come into that 10 o'clock session. Okay. All right. So I'll say this. We'll take a short break, and I'll return at 10 a.m. Eastern time for another live session. Okay. All right. Just come back here at 10. I'll see you shortly. All right. Thanks. Bye.